mortgage prison is same set of customers plus those with variable loans who got their loans 2 or 3 years ago when it was all-time low. Interest rates have risen and now they want to refinance to maybe another bank for a better interest rate, but they can no longer service the loan. So they can't move and they're stuck with that current lender. So you've been mortgage prisoned.
Yeah, sounds very depressing.
If you are looking at building that property portfolio, not even your second one, you should be strategizing for your third one, for your third property investment, and then go into your first one. Reverse engineer it, and that's the way to build your property portfolio. Don't screw yourself. This is Catching Up with Property. I'm Scott, and this is my friend Pauline.
Hello again.
And in this episode, we're going to talk about market trends.
Okay, so Scott, tell me, what is happening either in the residential market right now? With all the interest rates going up and all the negative news I hear, is now a good time to buy property?
Okay, there's a couple big question. So a couple of things to maybe unpack here. So first thing is, let's talk about the property and then we'll go into interest rates and what's happening in the interest rate side of things. So property. So property in Australia at the moment, we know there's a bit of a crisis. So if you're wanting to buy a house, there's lack of stock. If you're wanting to rent a house, there's lack of stock. And so you're really thinking about the economics there. So demand versus supply, right? So we've got rapid migration in the works at the moment, and think about builders right now. So builders are going under at the moment. So we can't get enough stock on the market. The cost of building has gone up, although they've kind of retracted a little bit more now. Cost of building has gone up. Getting labourers in is a problem as well. So you're pushing demand, right? There's no more supply coming in. There's increase of population, right? And whatever you've got left, everybody wants. So you're pushing that price up. So in terms of property at the moment, I think property prices are going to go up. Yeah.
So do you think it is now a good time to buy, or is next year, 2024?
Do I think now's a good time to buy? I think whenever you can buy is a good time to buy. But besides that question, I think you need to strategize.
Yeah.
You can buy whenever you can buy, but if your strategy makes sense, then it makes sense for you to buy. Does that make sense?
Kind of makes sense. Going back to what you mentioned about demand, there's not enough property to buy.
Yep.
So how does that impact the buyer, for example?
So pent-up demand, typically you're going to see increases in asset values or property prices. Mm-hmm. That's what you'll probably see. Everybody wants to buy in certain areas. The one thing is you don't have to buy in those areas. When I'm talking to customers, a lot of people get fixated on where they want to buy or what type of property they want to buy. Mm-hmm. But that's, you don't have to buy in those areas, or you don't have to buy that property. You can buy others and you can build your property portfolio somewhere else.
Yeah.
Where it's more affordable, where you can build a portfolio.
So do you think the interest rates will continue to go up? Like, do you have an opinion on where you think the interest rates will go? I
think interest rates are done. I think Philip Lowe has done enough right now. Micro signals at the moment, we know that the labour market unemployment rate has kind of gone up. Mm. We know discretionary spending, so clothing and footwear has gone down. So I think you're starting to see the economy starting to taper off, where people are actually doing those behavioural changes in terms of their spending, and then you're going to start seeing the cool down in inflation. So I think in terms of interest rates, personally, I think they've done. The other thing that you need to watch out for is there is a changing of a guard moment. So that means Philip Lowe is exiting and there's a new governor coming in, Michelle Bullock. So what she does, we're just going to have to wait and see what she does.
Okay, so Scott, in your opinion, which direction do you think the interest rates will go?
I think interest rates aren't going to go anywhere. I think it's going to stay stable for a while. I think it's going to be a wait and see. I think Philip Lowe has done enough at the moment in terms of pushing the economy. You can see the micro signals at the moment. People's buying behaviours and spending behaviours are changing in the real market. So I don't think in terms of interest rate, I think it's going to pretty much stay.
So plateau.
And then when there's changes in the economy, they may consider maybe moving them down later on, maybe towards next year.
And with unemployment, I mean, that obviously is always related to the economy and interest rates. What's your opinion on that?
So there's a couple of micro signals at the moment in terms of data. So unemployment rate, I think it's just starting to creep up now from 3.6% to 3.7%. So you're starting to see that unemployment rate rise, which is what the RBA wants anyway. The other micro signals is spending behaviors. So in clothing and footwear, we're starting to see the discretionary spending pull back.
Yeah.
And then the other thing recently you've seen on the news is they're saying that wage growth has not matched inflation. So inflation's gone up and wage growth has kind of done this, which means there's a big gap here, right? So that's going to bring pressure down on inflation. We also know in terms of produce as well, inflation has gone down in produce as well. So I think there's some micro signals there. Yeah.
So going back to strategy, so obviously everything that's happening in the economy, in the market, what's happening within government, that all will impact a potential buyer strategy, right?
How will the government impact the buyer's strategy? Look, government controls a couple of things. So, the RBA controls the interest rate, right? So if we have something stable, then everybody has a little bit more confidence. If interest rates go down, then you're probably going to have more confidence and more people want to purchase a property. And then you've got other things that haven't happened that may happen in terms of housing supply. So the government's mentioned now that they want to put 1.2 million new public housing in the next 5 years from 2024 and built for the next 5 years, which will probably strip out some of that heat in the market. How will it help you as a buyer at the moment? I think the main indicator is really interest rates and how much heat there is in the market.
Yeah.
So, yeah.
So mortgage cliff, mortgage prison. I think you're familiar with those terms. I personally am not. Can you explain, in your opinion, what those terms mean?
Yeah, absolutely. Mortgage cliff is customers who chose a fixed rate product on their home loans maybe 2 or 3 years ago when interest rates were all-time lows. So they probably got their interest rates in the high ones, low twos, right? And they fixed it for 2 or 3 years. They estimate maybe around 40% of, I think, home loan borrowers are coming or exiting off their fixed rate mortgages between June this year through to the end of this year. So that's what they mean by mortgage cliff. They've got like a really, really low rate. It's actually going to go the opposite way, but their repayments are going to skyrocket. So they're going to be impacted in terms of living expenses. Yeah. So that's mortgage cliff.
And mortgage prison.
And mortgage prison is basically the same set of customers, or even same set of customers plus those with variable loans who got their loans 2 or 3 years ago when it was all-time low. Interest rates have risen. And now they want to refinance to maybe another bank for a better interest rate, but they can no longer service the loan. So they can't move and they're stuck with that current lender. So you've been mortgage prisoned.
Yeah, sounds very depressing. Oh my God, am I in a mortgage prison? For example, you've described 2 mortgage terms, situations, scenarios that I'm sure most people have been in or are currently in. Potentially. So how can you help them if they are already in this situation?
Yeah. Okay. So mortgage cliff, if you're coming off a fixed rate mortgage, the first thing you should be doing is maybe getting yourself finance ready if you are wanting to move lenders for a better rate.
Yeah.
That's the first thing. So you really want to, if you are going to refinance, you are going through a new application process, make sure you're controlling you're not buying anything that you shouldn't be buying and controlling your spending and your managing your debts a little bit. So credit cards, non-discretion, unsecured debts, controlling those a little bit. So when we are doing the refinance process, it's a little bit clean. But the first port of call, I would say, before considering another bank is maybe just going to your own bank and just saying, hey, I've come off. What's the best rate you can give me? It might save you a bit more time. They might be able to give you a better rate. And it might be good enough for you just to stay there. But if they're not giving you a good rate, if they're not looking after you, then, and if you want to move out, then speak to whoever your trusted finance person is, whether it's your banker or broker, and just see if they can help move you for a better interest rate. Maybe towards beginning of this year and past 2 or 3 years, a lot of lenders were very, very hungry for refinance business. So a lot of lenders were providing high cashback refinances. That's slowly tapering off. So if you're wanting some cash back, you want a better interest rate, now's the time to really look at that. That's for mortgage cliff. For mortgage prison, for people who are in mortgage prison, in terms of APRA, they haven't really changed any regulations in terms of how we can assess their borrowing. But there is a handful of lenders at the moment who will reduce the buffer rate. So typically when a lender or a broker, when we're assessing your borrowing ability, we have to stress test you. Yeah. So if we were to lend to you, if the interest rate was 5%, would have to assess your borrowing ability at, say, 8%. Yeah. So there's a 3% buffer. And that's to stress test you. Now, the thing is, the mortgage prison is people borrowed at, say, 2%, adding 3%. So they were assessed at 5%. And now if they had to get reassessed at 5 plus 3 at 8, they're not going to meet that borrowing ability.
Yeah.
So some of the lenders there have reduced that buffer rate from 3%. Some have reduced it down to 1%. Some have reduced it to 1.5. So there's a handful of lenders there that have reduced that, so that if you are in mortgage prison and you can still service on a reduced buffer, they can help you with that. That's the first thing if you're in mortgage prison. The other things are, obviously, if it's starting to hit the cost of living, then you need to start looking at your balance sheet, what you're spending, what you're not spending, that type of stuff, and really start cutting out the
unnecessary
items. No Wagyu beef.
The fun stuff.
No Penfolds. You can have cast wine.
Or water.
Water, yeah, it's free. Actually, you pay for it.
So there is a positive. There are solutions for.
There are some solutions there if you are in mortgage cliff and mortgage prison. Yeah. The main thing is you just need to go to your trusted advisor or whoever your finance person is and just find out what your options are.
Yeah.
Yeah.
Okay. So what, in your opinion, is the better option when buying a property? Would you buy a house that needs renovating, like a fixer-upper, or would you buy a brand new property?
Yeah.
We spoke about builders going out of business. There's also this cost of supplies, cost of materials, cost of labor that has all gone up. What would you do if you were to buy another property? What would you go for?
I think it's a risk if you're doing any build right now.
Yeah.
Because we just don't know where builders are at the moment. We know just anecdotally, smaller and medium-sized builders seem to be a little bit more safer because they're controlling the balance sheet and controlling the flow of business. But personally, I probably wouldn't go into building at the moment for myself.
Yeah.
If I was to purchase right now, definitely something that's already been built.
You can just move straight in.
Or that's, if you are looking at the house and land packages, they're coming to completion. Like you can see it, it's there. You know, you're not going to go halfway through and go, oh, builder's gone. Yeah, so I'd definitely be looking at an existing property. And if you're looking at an existing property, my next thought is what value add can you create? So you're creating value add to create equity into that property. That's the way I look at it.
Yeah.
Yeah. So what does that value add look like? It could be, I don't know, maybe you're buying a 3-bedroom house with 2 lounge rooms. Maybe you can carve out one of the lounge rooms and turn it into 4 bedrooms. Maybe you can put a small extension on. Maybe you can subdivide that block, quick renos, quick cosmetic renos. So bathrooms, paint, kitchen, typical things, flooring. Yeah, just freshens up the property.
Have you noticed any change in the number of people requesting home loans or inquiring about home loans in this current market? Has the numbers increased, decreased, about the same?
I think in terms of home lending, it's probably cooled off a little bit. I think during that COVID period and working through to the next year or two, home lending was very, very hot.
Yeah.
Very, very busy, and also a lot of competition in terms of property. You've seen it cool off in the beginning of this year, and interest rates kind of paused for 2 months in a row already. So I think the confidence may start to come back in. The other thing is, typically in property, the buying season starts in September, which is spring buying season. So anecdotally, I think I watched a podcast and Mark Boris was saying there's pre-signed contracts for properties to all go onto the market from September. So there might be an influx of property landing in September. Number of people borrowing for home loans. It's softened from last year, but there's still demand there.
Okay. And speaking on that topic, do you think, in your opinion, is now a buyer's market or a seller's market? Like, where does opportunity sit? Does it sit high for a potential buyer?
Is it a buyer's or seller's market?
Yeah.
I think maybe it's more of a seller's market at the moment. I think there's a lot of demand in the property market at the moment with lack of stock. That's the first thing. Yeah, I think there's more buyers in the market at the moment.
So what does that mean how does that impact house prices, for example?
More demand, less supply equals higher prices.
Yeah.
Yeah, put it simply, yeah.
So definitely, in your opinion, a seller's market then?
Yeah.
Yeah. Okay, that's good to know. Speaking on the rest of Australia, I think you've kind of spoken more about New South Wales. So what is, in your opinion, the property forecast for nationwide?
Ooh, big one.
Like state by state for early 2024.
Early 2024. Early 2024. Ooh. I'll be a little bit more broader.
Okay.
That's a little bit too soon.
No, I can't believe it's what, Halloween coming up and then Christmas. Yeah.
So let's start with Queensland. Queensland seems to be a bit of a hotspot, I think, at the moment. You're seeing a lot of internal migration, so interstate migration going from states to Queensland.
Is that because of the whole COVID lockdown, do you think?
I think it is a COVID thing, but I also think there is a bit of grey nomads. You know, like they're moving coastal regions. They want to be warmer conditions.
Yeah.
You know, they want to be in those areas.
Get out of the city.
Yeah. Okay. And they made it. They're enjoying their life.
Yeah.
I want to do that, but now. So I think Queensland is a little bit hot. Another driving force in there is the Olympics. They're going to be hosting Olympics in 2032.
Yes.
So as we're getting closer to Olympics in 2032, it's going to drive up more property development, more demand there. You've also got regional pockets, infrastructures building into those regional pockets from what you can see. And typically with any state, you know, you're going to get trickle through from capital city through to regionals, right? So I think Queensland's going to continue to increase in value at the moment.
Yeah.
NT's going to just trickle along, I think.
So stay about the same as they are now? Or
Yeah.
what's their property market like?
I haven't heard much around Northern Territory at the moment. If there's one thing that I'd be thinking about, and it's anecdotally, of course, is we've always had a partnership with America, American military, and I believe there's going to be a posting there with some of the American Marines. So will that increase, you know, the market? Maybe not, maybe rentals, you know, that type of thing.
And does increase in tourism impact, you know, property? You spoke about property shortage in New South Wales. What about the other states?
Tourism's going to fulfill the purpose for short-term rentals in those hotspots. So like, you know, like Cairns, Gold Coast, that type of stuff.
Yeah.
You know, if you're going over to Western Australia now, then you're probably thinking about Exmouth. But I'll probably unpack Western Australia now. So Western Australia is our mining for Australia. Big portion of our mining it's a real mining state where we produce a lot of resources. And typically when mining does well, the state does well. and the property market does well. And if you
Yes.
think about it, just behaviors, right? If there's an increase in mining, there's more people that's needed, there's more laborers that's needed, there's more technicians that needed, more engineers. They all migrate to Western Australia, which increases demand on their property. And I think the increase in mining and resources at the moment is going to bring Western Australia back, I think. The market there is kind of cooled off for maybe last 5 or 10 years.
Yeah.
So you started to see a lot of demand in the last maybe 2 or 3 years there at still very, very good and affordable prices.
More affordable than say-
Sydney.
Yeah.
I think every state is more affordable than Sydney.
Yeah. I was just thinking that same thing. Okay. What about South Australia?
South Australia. So I was speaking to a couple of acquaintances, buyers agents. South Australia's been bubbling for a little while. Have you been to South Australia?
Yes.
Yeah. Have you noticed there's a whole generation gap?
Not really. I went for a wedding, went to taste some wine.
You went to
But I'll
Penfolds?
take your word for it. No, I didn't make it to Penfolds actually.
Yeah. next time, Barossa. But if you go to South Australia, it's very interesting, the market there. It's you've got like your families, your kids, and then middle-aged adults and then grandparents' age, right? Like retirees. But that there's like a middle section that's kind of like sucked out. Like 20 to 30-year-olds. There's very, very far and few there, right? Because of job market, right? So they either go to Melbourne or they go to Sydney for jobs. What I think is going to happen is a return of all those people who have found jobs returning to South Australia and bring that market. South Australia has also typically been an underperformer, but
In relation to
property,
quantity or just the prices?
just
Value.
property performance, yeah. So, but the last 2 or 3 years seems to be bubbling, yeah. So I think there's opportunity there if you can still find it, but there might be other areas that you could focus on as well.
Okay.
Yeah.
Victoria.
Wow. Land tax. Anyway. Mortgage cliff. Land tax. Funny enough, I was actually speaking to a buyer's agent friend and he was saying to me, Victoria is to be watched because nobody's watching it right now. And I asked him, well, what about this land tax? And he goes, Scott, the media did a fantastic job at this land tax. He goes, if you own over $1 million in land value,
Yes.
it's like $500. And I
So
went,
it's not a lot.
and I go, what? So it's not a lot. He goes, there's a lot of uneducation in the Victorian market. And he said, that's probably a market we probably need to watch.
And so that obviously has impacted how the market is going in Victoria generally.
So I think people are kind of, because of this whole
scared.
they're being
Yeah.
scared away from Victoria.
Yeah.
And what it sounds like from my acquaintance is that Victoria could come back. Just nobody's watching it. So
Yeah.
watch it.
I will. I think we have covered all but Tasmania.
And then we need to come back to Sydney. Yeah. Okay, Tas. I think Tas has been bubbling for quite a while as well. Think of infrastructure. It's an island out off the main island. Same story, has demand, increased demand, increased population, can't get more supply on. It's probably more difficult for them because they probably need to ship all the building materials onto there and then they need to get the right labourers to actually start building. So I think they're going to probably plateau for a little while. Mm-hmm. That's what I think. But yeah, Sydney's going to be, look, Sydney is the capital city. Look, I'm a rent investor, right? So I rent where I live and I invest in other states.
Yes.
Yeah. If you're looking at buying a home to live in, that's okay. If you're looking at investing, then I would probably say there are other areas that are probably a little bit more affordable than Sydney.
Okay. So I think this question is on most people's minds right now. If I was to buy a property now, what would be the hot tip that you'd like to share?
If you're buying a property, okay,
Like
So-
right now, what would be your hot tip?
don't screw yourself.
Okay.
So-
Noted.
Yeah, don't screw yourself. Don't blow out your borrowing power and be one and done. If you are looking at building that property portfolio, strategize for not even your second one, you should be strategizing for your third one, for your third property investment, and then go into your first one. Reverse engineer it, and that's the way to build your property portfolio. Don't screw yourself.
Don't screw yourself. Got it.
There's really no secret sauce. The secret sauce is really having your trusted team. And having your finance person or the person who can get you money or borrowing money, really working out, what your borrowing limits look like once you've purchased your third one from the beginning. From your current position, where if you can buy your third one now, then you can buy your first one. If you can only buy one now and you just buy one, it'll be very hard to buy that second one. You'd have to wait for material things to change. So material things are increasing of income, changing jobs, or creating another revenue stream, side hustle, so that you can buy that second one. So secret sauce is strategy. Yeah. Don't screw yourself.
That should be an emoji.
Don't screw yourself. Yippee finance.
Right.
We celebrate your milestones, but don't screw yourself. It's a bit like an Asian parent. What was it? Backhanded compliment. Thanks for watching Catching Up with Property. I'm Scott, and this is my friend Pauline.
Asking all the hard questions.
And we'll see you in the next episode.
Bye.
Bye.